On rare occasions, you get the opportunity to invest in an industry leader. User testing and their forthcoming IPO represents that opportunity in the user testing space. Perfect name, I know. We're going to break down both the bull and the bear case for this equity, talk about how they deploy their service to half of the Fortune 100, and a whole lot more. Stay with us.
I'm Hannah, this is Aaron, and you're watching the Piper Rundown. We analyze business and culture to help you win. We have a mission here on the Piper Rundown, and it is to help you build your better business brain. We release videos like this all the freaking time. We have so many fascinating IPOs coming down the pipeline. Make sure you are subscribed so you don't miss a single one, and hit that bell for good measure.
User Testing will be hitting the public markets, aiming to raise more than $227 million at a $2.27 billion valuation. Interesting that those two numbers lined up, eh?
Hey, it is.
They'll likely be trading between $15 and $17 per share. The company was founded out of San Francisco, California back in 2007, and they do exactly what their name suggests that they do. If you are a large company and you are launching a new design, app, product, brand, concept, user testing will offer that to consumers and have them record themselves going through whatever part of the process you are focusing on. So if you want to see how someone checks out and what obstacles they may face, someone will literally record a selfie video of them basically stream of thought talking through what their experience is as they try to check out. Oh, your live chat button covers up where I can check out. Oh, am I buying one or two? All these kind of simple things that might seem obvious to you as the designer of the product can sometimes go right over the consumer's head. And so you get to test that before you're actually launching it to the masses. And they have been able to launch themselves to the masses very effectively.
Way to go.
They have more than 2,000 customers, more than 249 of which pay over $100,000 a year, and 9 of those pay more than $1 million per year.
Wow.
90% of their revenue is subscription based, and they are getting it from more than half of the Fortune 100. I'm just going to spit a few of the logos at you,
Please
but you
do.
can see even more on the graphic that we're going to put up on the screen. Adobe, Lowe's, Hyundai, Coinbase, Stitch Fix, Xbox, Patagonia, Subway, and Samsung.
Hot diggity dog.
So they are able to sell into the VP and C-suite of these companies in order to better execute this process. And they are doing it very well because they have the #1 CX experience software rating on G2 Crowd, which is a resource for tracking these types of software solutions. Another interesting element of the product is that you can select the psychographic and demographic that you're looking for. So if you are a product that's trying to sell to affluent, middle-aged women making more than $80,000 a year, they will literally source those people to go through your process to make sure that it is aligned with what you're trying to do for your consumer. A brilliant process, and one that is growing relatively substantially. In 2019, they did $76 million worth of revenue, $102 million in 2020, and $66 million in just the first 6 months of 2021. $140 million in annual recurring revenue is the current rate that they are on. That's the kind of calculus that you do once someone signs up. If someone signed up in the 5th month of 2021, that's still going to be recurring revenue to some degree. And you can kind of project that forward a little bit. 2019, they lost $19 million, lost $34 million in 2020, and lost $24 million in the first 6 months of 2021. But that's okay. That's okay because you've got enormous contracts. You've got more than 200 companies paying you over $100,000, 9 paying you over $1 million, and you've got a net dollar retention rate of 117%. So what that means is your existing lineup of companies is paying you $1 this year. That's going to turn into $1.17 the next year. And if you are not churning those companies off your platform, which you're probably not if you're the #1 rated solution for the service that you're providing, and that is going to continue to compound even if you're not selling into more of the Fortune 100 which they are because they have a built-out enterprise sales force. They are investing heavily in growth. 58% of revenue is being deployed into, as an expense, sales and marketing efforts. So they know they have the leading product in this space, and they're trying to get it into as many companies as possible, as fast as they possibly can.
Damn, this is looking like a pretty exciting company to me, Aaron.
I would say so.
Well, let's take a look at the comps. In order to better understand any company that you're looking to invest in, it's very helpful to get a feel for the surrounding business landscape.
Very rarely do I come out so bullishly in the comps section.
Ooh.
Usually you'll hear me say it earlier or later in the video. Usually this is me just trying to be as unbiased and get a lay of the land as possible.
Yeah.
Take this as perspective. All three of the most common competitors or replacement type of services for this are all still privately traded companies. Applause, formerly Utesting, Dscout, and UserZoom. Right off the bat, I think the only one with close to as good of a name is Applause. But these are all privately held companies. UserZoom is on a $80 million annual run rate. Dscout has only raised, I believe, less than $20 million in private funding. And Applause is the only other player that's really raised hundreds of millions of dollars. But clearly to me, User Testing seems to be the best reviewed, has the largest clients and the largest annual run rate. UserZoom is bragging about 80. We've got User Testing all the way up at 140.
Yeah.
And all the other players, if you think about who could come into this, you think about another company that really prides itself on customer experience, Adobe.
Oh yeah, for sure. Adobe
Does not want to get into the manual process of getting all these consumers onto your platform ready to test. So this is subscription revenue with professional services to help with the kind of onboarding and getting the company up and running with actually using the service. But there's a ton of manual management of finding the consumer, getting the consumer the product, getting the video recorded correctly, getting it back to the customer.
Oh, yeah.
Most companies say, no, oh, thank you.
Yeah, no, User Testing has made themselves quite a moat.
Indeed.
On to the meme factor. If you're unfamiliar with the meme factor, it's where Aaron and I rank the memeability of a company on a scale from 1 to 5. 1 being negative memes, 3 is completely neutral, and 5 is all the positive dank memes. Feeling good about User Testing? The name is dope, like you've carved yourself out a corner right there. And from what I can gather, all their customers seem to be pretty happy with the product, and it's like quite an efficient, effective service that they're offering. So I'm going 4.1 for this one.
Go 4.2, almost the exact same reason.
Nice.
We're on the same page.
Same page. Great minds. You know what they say.
If you want to continue to get on the same page with us, don't just subscribe, ring the bell. On average for YouTube channels like ours, it's about 15% of the subscribers that will ring the bell, meaning they get a little notification as soon as a new video drops. We're only at like 8%. So help us double that. Help us prove to YouTube and the internet that there's a whole bunch of better business brains on the rise. Ring the bell.
Ring that bell. On to the bull and the bear case.
More of the letter B, baby.
Oh yeah.
The bull case starts with this is a company with pace. And that's somewhat intangible. You can kind of see that in the numbers, but they are growing their revenue. They know that that revenue is going to turn into more revenue in the subsequent year because they have the best product. At least in their vantage point, at least according to these reviews. And so the capacity to continue to invest in sales and marketing, to quicken the rate of getting even more of the Fortune 100 is happening precipitously. You're part of that trajectory. In addition to that, this has a broad applicability. E-commerce is like almost everything now. If you add in the potential for deployment of an app, the fact that you could be user testing a B2B service or a B2C service, I think that there is really little in terms of constraints on who could potentially be a customer of theirs. And finally, they are the leader. This isn't Azure, AWS, and Google Cloud where there's going to be, hundreds of billions of dollars in market cap broken out from this industry. It's smaller than that, but they are the leader of the pack. And as the, heads of user experience research at one large corporation move to another, maybe they'll be happy with the alternatives, but if they really love it this much, it's going to get deployed into more companies.
Totally.
The bear side is basically that this is not a, they do the different like industries of like how big this will be in the future. It could be growing a lot, the user testing arena, but it is not a mega, like hundreds of billions of dollar market that this is.
Sure.
It is smaller than that, evidenced by the fact that they have half of the Fortune 100 and only 9 of them are paying $1 million a year. You have to imagine that to some degree, the totality of what this can be is capped unless they start to diversify into other adjacencies, which would actually start to get them competing with someone like Adobe.
Yeah.
So I think that there's a really compelling kind of like midterm growth story. I'm less bullish on like the long term for a company like this, but we're not really in a market that people are like crazy obsessed with the long term.
Yeah.
So that's not investment advice. Make your own decisions. Tread carefully. I know that I'm definitely on the higher end of bullishness relative to other ones I do. But at the $2.2 billion market cap that it's estimated to be at right now, $140 million in annual revenue. I think the reason that it's not higher, we've seen plenty of other ones with $140 million in annual recurring revenue.
Yeah. Look
at $3, $4, $5 billion market caps. I think the scalability element is the big question here that's kind of capping it as to why it's not just like a traditional B2B SaaS that's infinitely deployable at an 80% margin.
Totally fair. And that's Rundown. Hopefully you feel that your business brain has grown and expanded. If you're a viewer this long into the video, we thank you, we appreciate you, and we'd like to shout one of you out from a previous video. All right, I know I'm gonna butcher this name, but Oriel XO asked us on our Desert Peak Minerals IPO video, will you guys be making a video on Sweetgreen's IPO? You know it. Of course we will. Make sure you're subscribed and you ring the bell so you don't miss Sweetgreen's or any other IPO coming your way.